Ladies and gentlemen, good day and welcome to the IIFL Finance Limited Q4 FY'24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kapish Jain, Chief Financial Officer at IIFL Finance. Thank you, and over to you, sir.
Thank you very much. Ladies and gentlemen, thank you very much for joining this call. This is the Q4 earnings call for IIFL Finance. On the call today, we have Mr. Nirmal Jain, founder and MD of IIFL Finance. We have Mr. Monu Ratra, who is the CEO for IIFL Housing Finance. We have Mr. Pranav Dholokia, who is the Chief Risk Officer. Myself, Kapish, and today we will talk about the progress of the company with regard to Q4 and its performance, including what's happening on the RBI side. For a complete update on that, I now hand over the call to Nirmal. Nirmal, over to you.
Thank you, Kapish, and welcome to the call to review Q4 as well as the full year performance. Very unusually this time it has been delayed. The result announcement has been delayed a little bit, but there we are. As you have seen the results of the full year, we have ended with a loan AUM growth of 2%. And primarily, there has been a decline in gold loan on a quarter-over-quarter basis by 5% because March is a peak quarter. And last year in the Q4, we had a quarter-over-quarter growth of 11% in gold AUM. So that impact obviously is there on our total growth as well as on our profitability. I think we ended the year on a consolidated basis with a total decline of 6% on a YOY basis in our Q4 profit. In the post-tax profit, and on a full year basis, our post-tax profit has grown by 23%, and we ended the year on a consolidated profit of 1974 crores, and which was a little short of our earlier guidance of 2,000 crores for the full year on a consolidated basis. This is prior to minority interest. Now, a brief update on the RBI embargo and then about the macro environment, and then also I'll discuss certain key aspects of the numbers before I hand it over to Kapish for a more granular and line-by-line discussion. So as you're aware, on 4th of March, we had an RBI order on about basically a cease and desist for the gold loan disbursement and certain other activities with the gold loan business. And RBI in the order stated that they will institute a special audit and based on the findings of the special audit as well as the inspection as they require, they will consider the review and consider lifting the ban. The special audit has completed and special auditors have submitted the report to RBI. In terms of as far as the company is concerned, we are very confident that we have fully complied with all the regulations of RBI as well as we address all the deficiencies. Besides this, we have taken several other steps internally in terms of strengthening the organization, hiring senior level people. A few have joined and a few more are in pipeline. Also, basically having a much stricter and stronger audit, and we are also in the advanced stages of having concurrent compliance audit along with more strengthened internal as well as the internally the audit which is required to make sure that the compliance is foolproof on an ongoing basis. Also, there are quite a few policy changes and the board supervision will now significantly be higher, and all the alerts and compliance will be updated to the board as well, and board will regularly discuss any exceptions in this to make sure that there is no recurrence of any lapse on the compliance. So we ought to meet and exceed whatever expectations RBI can have from a regulated entity like ours. Coming back to the macro environment is very positive. The democratic government is back for the third time, and obviously the reforms continue. What the buzz and the activity that we are seeing at the ground level is also very positive. The first announcement has been about affordable housing, which again is positive for our housing finance business. In terms of financial numbers, I think there are a couple of aberrations that I want to explain broadly before we, of course, will take them up in question and answer if required, as you know, there may be more questions on the same. One is about the gold loan NPA, because there's a significant spike in this quarter. But as far as that spike is concerned, in my opinion, there is no increased risk for a medium-term or long-term risk in that business as such. There are certain rollover cases. So historically, if the customer has not paid in time, but if the gold value is enough to roll over with 75% LTV, that was being done. Obviously, that practice has been objected to, and obviously our auditors have taken a view that those assets or those gold loans have to be classified as NPA. Not only those gold loans, but the linked accounts. So supposing there's a delinquency like this in one account of a customer, and customer has taken two more gold loans, then all three have to be classified as NPA. Now, if we have rolled over these gold loans, then we also can't go back to the customer and ask him to liquidate or because we can't take that to auction till the rollover period is over. So it's a matter of 1 or 2 quarters, because obviously when these cases come up for rollover again, we shall not have this practice which is not fully compliant with the RBI regulations. But what we intend to do is that once the rollover period is over, then either the customer has to pay or these loans will go for auction, and in wherever customer can arrange for it, so they can also get the balance transfer done. So that is about approximately 282 crore rupees in the gold loan, and that has resulted in the spike in gold loan GNPA, and which I think will normalize in next couple of quarters. But what is really heartening and what is really positive for us to note, that our loan book, which was around over 26,000 crores from the 4th March, has come down a little below 16,000 crores currently, and more than 10,000 crore rupees of gold loans have been repaid by the customers, and they've taken their jewelry, and we did not have any case of customer disgruntled or any asset quality issue or losses, and that actually has been a real trial by fire, which basically testifies that the systems and our credit underwriting have been fairly robust. Other than that, I think there's a 200 crore rupees of loss in a fair value. We had an AIF which was actually tenure was expiring on 1st of June, but the large investors basically opted for in-specie distribution, and those debentures, we also opted for the same, have been sold to ARC, and broadly there has been a fair value loss of around 150 crores there. And also the SRs which we had with ARCs have been, most of the ARCs valuations of the SR has been more conservative, and there was almost a write down of about 100 crore rupees there, and there has been some provision write back. So broadly there's a 200 crore rupees of hit coming primarily from the AIF unit. Now our exposure to AIF is just about 5 crores, which is the minimum required as a sponsor, and all other assets have been the units have been redeemed, and the debentures which we received in specie, they have been basically disposed of to NBRC. So with these two, another question which obviously will be there in the investor's mind is how are our disbursements and the growth in the other businesses other than gold loan. So we have 3 more businesses, as we are aware. So in the month of March, obviously because of the sudden shock, the business has slowed down after the 4th March. But in this quarter, home loan is more or less resumed and has become normal, and I think the disbursement in this quarter are expected to be similar to the same quarter last year, broadly in line. However, microfinance still is under a little bit of caution in terms of availability of credit from the banks and the growth that we want to basically have in this. We also want to make sure that this business also becomes foolproof in terms of compliance before we resume the normal growth. So the disbursement in this quarter compared to last quarter last year may be about half, and the book may go down a little bit in this quarter as well. In terms of our operating cost, which again, in Q4, till the RBI order came, we were on a growth path, and particularly our microfinance business was also on an aggressive hiring spree for the branches that were set up in the quarter before. And March quarter typically also is a higher volume and higher cost as well in terms of the incentive bonuses which have been committed or approved. They're also paid out. So the cost has gone up in the March quarter. But now when we talk about this quarter, we have not retrenched any people, and obviously whatever retrenchment is happening is normal course what was obtained even before the RBI order, because we are very hopeful that we will be able to resume our business. And even if it means operating cost or operating loss in terms of maintaining the infrastructure, but it's very important for us to do that. Because there are millions of customers with jewelry and ornament, they are in the custody of our employees in our branches. So our branches and employees remain as it is. And I must express my gratitude to all the employees, because despite this uncertainty, they've been holding the fort with full commitment as well as confidence and faith in the company and the business. And they've been servicing the customers, because despite the fact that several lakhs of customers have closed their account, we did not have any customer service issue or any complaint from customer of any significance as such. So we hope that we'll come out of this crisis and we'll have our compliance much stronger as we go forward. I think with this I'll hand it over to Kapish, and then I'll be back for Q&A. Thank you.
Thank you very much, Nirmal. Once again, ladies and gentlemen, a quick update on our financial performance. In light of the embargo that's currently there with the RBI, the numbers are slightly muted. So for this quarter, IIFL Finance profit after tax before non-controlling interest was 431 crore, down 6% YOY and down 21% on a quarter-on-quarter basis. We recorded pre-provision operating profit of 990 crore, which is up 30% YOY and 3% on a quarter-on-quarter basis. For fiscal 24, IIFL Finance profit after tax before non-controlling interest was 1974 crore, which is up 23% YOY, and pre-provision operating profit was 3664 crore, up 30% YOY. Talking about the AUM, for the quarter, consolidated AUM grew by 22% on a YOY basis and 2% on a quarter-on-quarter basis to around 78,960 crore. Further dissecting the AUM, our core product driven by home loan, gold, digital loan, microfinance and LAP. So the gold loan had a degrowth. Microfinance grew by around, and in aggregate, they grew by around 25% and 4% Q on Q. The segment now comprises of 97% on the retail book perspective, because the CRE book degrew by around 30%. Our gross NPS is marginally high at 2.3% for the reason that Nirmal explained earlier, and the net NPA is around 1.2%, which is up by 48 basis points and 11 basis points respectively when you compare to the same period last year. Our stated guidance has been 2% of gross and 1% of NPA. We've slightly digressed there, but we're going to come back to those numbers in the soonest time possible. With the implementation of the excess credit loss under Ind AS, our provision coverage ratio stands healthy at around 104%. And during this quarter, as Nirmal mentioned, the real estate AIF investments were matured, and these assets, along with 2 CRE accounts, have been transferred to an ARC since there was a higher expectation with regard to recovery time for the ARCs. In line with our capital optimization strategy, 36% of our AUM is either assigned or co-lend to banks as of March 24. And going forward, we will see our relationship going forward in additional products like even business loans and home loan to emerge further on the co-lending side. The assigned loan book stands at 16,488 crore, down by 3% YOY and 12% on a quarter-on-quarter basis. Yeah. Besides this, co-lending assets are at 11,639 crore, up 54%. Our quarterly average cost of borrowing has increased by 20 basis points YOY and 6 basis points to 9.13 as on 31st of March. And now a brief update on our liquidity position. So during this quarter, we raised 5,531 crore. Prominent among them was 1,271 crore that we raised through the rights issue. And 500 crore that we raised through the NCD that we borrowed in the month of March. Our cash and cash equivalents stands at around 6,559 crore. This is adequate for us not just to meet our near-term liabilities, but also to fund our growth as we go forward. We have a positive ALM whereby inflows cover or exceed expected outflow across all our buckets, and our net gearing stands at 3.7, not considering the 1,231 crore that we raised in the month of May. Our annualized ROE for the quarter stood at 14.6, while ROA stood strong at a 2.9%. For the full year, it was 18.4 ROA and ROA of around 3.4. Our basic earnings per share for the quarter is 9.8 rupees per share, and fiscal 24, it was 46.3 per share. To summarize, as of March 24, our capital adequacy ratio for NBFC is 19.7. If I would have considered the equity days in the month of March, this capital adequacy would have been healthy at around 26%. Housing finance capital adequacy was 42.8 and Samasta was 24%. So with this, I hand over the mic back to Nirmal for any Q&A that you open the floor now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Once again, you may press star and 1 to ask a question. The first question is from the line of Dhaval from DSP. Please go ahead.
Hi. Thanks for the opportunity. I just had 2 follow-up questions on the opening commentary. First is relating to the fair value impact. Just wanted to understand versus our last valuation, how much was the sort of cut down in our final realization. And so just if you can spend a minute more to explain what led to this markdown, given that generally real estate market is doing reasonably well. So just any specific reason for the sort of reduction in the value. So that's the first question. And second is relating to just given that bulk of the quarter is behind for 1Q, if you could just update on the liquidity position as well as on the growth across all the 3 businesses. How do you see that for the rest of the year? And also if you can give some perspective around assignment income, how that is likely to shape up in the current financial year. Thanks.
Thanks, Dhaval. So the markdown has 2 components. One is ARC, the securities which they have, and the second is AIF units that we sold. So in case of ARC, there's a valuation done by SR. There's a fair value which is done at every quarter. And real estate market is good. That is a fact, and there's no denying on that. But this quarter-over-quarter valuation, they basically take the realization, the flow of interest and many other things. So how rating agencies do this, I also don't have 100% insight into it. But these valuations are done on a quarter-over-quarter basis. My perception is that given that there's general caution with the regulatory stringency that we are seeing, the people are becoming more conservative in terms of how they value the SR. But whatever we realize, so we get our component of SR, which is maybe more typically is around 85% in many of the transactions that we have done. So to that extent, this becomes like a temporary thing, because ultimately what you realize, the bulk of it comes to you. Most of it comes to you. Similarly, the second component is AIF, which is, where we had again real estate assets. So, these units again, when they are sold to ARC, the typically 85% SRs remain with us. And there again, because we had to do this transaction a little quicker in the month of March, and everybody wants to be a little more conservative today when they value these assets. So the fair value was done every quarter, and we could have let it run the full course till 1st of June, but there was concern about AIF, and which RBI has raised several points in time, that regulated entities should not have their loan accounts or these assets in the AIF. Now, this is a very little bit of a tricky case, because RBI regulations said that last 12 months, these assets were transferred 3 years ago. But when they were transferred, 12 months before that, they were on our books. So the AIF also have been transferred at a negotiated value, and in case we realize more as the real estate market is good, then that will come as a gain on the SRs that we hold. The second question about growth, as I said that the home finance, we are seeing that the growth is, the disbursements have normalized. They are at a level maybe similar to what it was in the first quarter of last year. Maybe, and then going forward in next few quarters, we'll see growth as the environment also has become positive with Prime Minister announcing the reinstatement of affordable housing scheme and the incentive for the same. And I think the third question was about assignment income. So gold loan assignments have not happened, obviously, because of the RBI embargo. To that extent, assignment income will be impacted incrementally. Because whatever we could have got on this, and the other income will run down over a period of time. And in housing finance, I think assignments will go at normal course. But in any case, if you see our last year's housing finance, and there was hardly any incremental the assignment income, which is upfront, is almost negligible now, is zero, is negligible, and therefore we don't see any YY impact there.
Just one follow-up on the first point on the AIF unit. These were transacted by 361 for us and were largely sold to private investors. I mean, because I understand
361 is not involved in this at all.
Okay.
So there's no 361 in this. It's straight away sold to the ARC.
Oh, okay. Straight away sold to ARC. And got it.
In this fund, I think 361 had a 1 crore investment originally, but that remains. So there's no change there. But other than that, 361 has no involvement in this.
Understood. And just one final thing on the NSE stake, that we bought. Any update on that? Have we monetized that in this quarter?
Yeah. So I think that has been bought in this quarter, June quarter, and by the end of the quarter, it most likely will be liquidated. And whatever gain or difference will be accrued in this quarter, June quarter.
Got it. Great. Thanks, and all the best.
Thank you. The next question comes from the line of Anusha Raheja. Sorry, that's Deepak Podar from Sapphire Capital. Please go ahead.
Am I audible, sir?
Yes.
Okay. Thank you very much, sir, for the opportunity. Now, so because of all this, our costs have increased.
Deepak, sorry to interrupt, but the line for you is not very clear.
Yeah, it's not clear.
Hello?
Sir, please go ahead.
Yeah, it's better now?
Slightly better, sir. Please proceed.
Okay. So I just wanted to understand now, because of this uncertainty, even our cost this quarter has gone up, right? Even the cost to income is on a higher note. So how do we see that the cost to income in this year, FY'25? I mean, will it normalize or will it stay at these range? Yeah.
So I think the cost to income also. Okay, there are two. One is the total absolute cost might come down a little bit, because although we are not retrenched or we are not reducing manpower as such, but the variable component may become lesser with the business and whatever cost control measures that we are taking. But cost to income ratio may remain a little more elevated because our gold loan book has run down, and obviously the income that we get, the net interest margin, which we are getting, say, on 26,000 crores on March, and actually would have grown further in the month of March, will be significantly lower. But once the ban is lifted, I think it will take a couple of quarters or a few months for us to try and get as much, gain market share as much as possible. But because the income will be impacted, the total AUM is impacted, cost to income will be impacted this year, at least for this year negatively.
Correct. So absolute level, I mean, correct. I think this quarter it was around 1,060 crores, right? So on an absolute level, going forward, maybe it will be around that range only, right?
It should taper off a little bit with some savings in variable and whatever we are able to achieve. But it won't be it won't be significantly different, but it should be a little lower.
Okay. And I got that point. And on the gold loan side,
our consolidated quarterly operating cost is 769 crores. 769 crores. That is the number that you are referring to, right?
Yeah, this quarter it was about 1,060 crores, right, on the operating cost.
No, I don't know which number you are referring to.
Yeah, the consolidated operating expenses, right?
Operating expense for the quarter is 769 crores. Yeah, Vivek.
Okay.
So it added loan losses and provisions in this.
No, so it includes those fair value adjustment as well.
No. So, okay. Fair value is one-off, so I don't think that 200 crore rupees loss should not come back. I mean, that is not recurring. The operating cost component is 769 crores, not 1,000. So
fair enough.
Fair value, as I explained, that is a one-off thing. Yeah.
Fair enough. I got it. And do we have any kind of understanding on the gold loan side? Will this ban be lifted or how soon we expect it? So any kind of comment would be helpful.
Absolutely. No, actually, it's all with RBI, so I don't have any more insight into this.
Fair enough.
We are engaging with RBI in trying to satisfy and make sure that we meet all the requirements that they have.
Correct. Fair enough. And do we want to taper off the growth outlook that we had given earlier in terms of this year 25% growth? So what may be the range we may look at right now given the circumstances?
I don't think at this point in time we can give any outlook or guidance on growth.
Fair enough.
Since this RBI ban is lifted. And, so our focus will be in compliance this year, on the compliance, risk management and control. So, there's no guidance for growth that we can give.
Understood. That's fair. Absolutely. I think that's it from my side, sir. All the very best. Thank you.
Thank you so much.
Thank you. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, good afternoon. Thank you. So the first question was on the SRs. What is the total quantum of SRs that we have on our balance sheet, and against them, what are the provisions that we're holding today?
So SRs are valued at fair value. So, every quarter, the ARCs basically do the valuation of them. And so we have SRs for all businesses, in terms of microfinance, SME and construction. So I think in the standalone NBFC is a little less than 3,000 crores.
Okay, so in the standalone NBFC, we have total quantum of SRs which are a little less than 2,000 crores.
3,000, less than 3,000 crores.
3,000 crores, okay. And versus this 3,000 crores of SRs, how much provisions will we be holding on them?
As Nirmal mentioned, they are marked down. So depending on the valuation that you get. Yeah, so there's a fair value which is done. So basically the provision is taken care of the fair value.
Got it. So secondly, on gold loan.
So we have to mark them down almost about 100 crores.
Okay.
Yeah.
So secondly, on gold loans, I just wanted to understand, while you have already said, the ball is now in RBI's court, but just wanted to understand, after the special audit was concluded, what kind of conversations we've had with the RBI. And secondly, in gold loans, are we taking any cost rationalization measures?
So we are having a very positive engagement with RBI. We are taking their guidance and trying to come up to make sure that there's 100% and highest adherence to the compliance. Cost rationalization measure, I said no, because we have a fairly well-trained team and a business that has been built over the last 14 years assiduously. So we don't want to do any cost cutting because customers jewelry in our custody, and we hope that we shall be able to resume business quickly. So at this point in time, I think we are running the entire infrastructure as is. And we are doing all the necessary steps required to make sure that we retain all our people as much as possible.
Okay. So in your opening remarks, you suggested, right, that gold loans are a little less than 16,000 crores now. This is as of May or as on date?
As of date.
As of date, they have declined to less than 16,000 crores. And so, I mean, has gold loans seen, especially employees in gold loans, have we seen any significant attrition in especially the frontline staff?
There is normal attrition which has been there historically, but there is no additional attrition that we are seeing. So, in the entire crisis, we've been able to hold back our people and make sure that the customers are not inconvenienced and they are serviced properly. Actually, it's just coincidental that last year we had announced a golden ESOP scheme where many of our old employees were given 3-year bullet vesting ESOPs at 10 rupees, regardless of the stock price. Obviously, those stocks are significantly in the money, and people expect to build their wealth, and that has been a good retention tool. But other than that, we are engaging with our people, and most of them are old, loyal, trusted people, and they have full confidence and faith in the company's business and our ability to steer clear of this.
Okay, and sir, my last question is again kind of circling back on liquidity and cost of borrowings. Understandably, you might not have had to borrow a lot incrementally after the gold loan ban, but how is it the engagement with banks or debt market participants going on after the ban? And I think in your commentary or the press release, we said that we are now kind of thinking about more controlled AUM growth. So understandably, until the time this ban gets lifted, it's difficult to really guide on AUM growth targets. But at least are we kind of looking at more moderated growth going ahead, given that you spoke about gold loans will start growing only after the ban gets revoked. In microfinance, we are again kind of looking at some calibration. So other than maybe digital loans and housing finance, we are seeing some moderation going ahead.
So I think I don't want to speculate about growth, and I don't think that it would be right to say it will moderate or not moderate. But what I'm trying to say is that we don't want to give any guidance on growth. And this year, primarily we want to make sure that our assurance functions, which comprise of risk management, audit, and compliance, they should become foolproof. They should become something like industry benchmark. And in terms of the organizational goals, growth becomes secondary. But that doesn't mean that there's any guidance of a slowdown or acceleration of growth. But the best is that there's no guidance for growth. That is how I would like to put it. Secondly, in terms of liquidity, we have 6,559 crores of liquidity as at March end, which is fairly comfortable. Even today, our liquidity is quite comfortable. And even before the crisis, we have always been conservative and kept our liquidity, which is enough to cover the contractual liabilities for the 6 to 12 months in the foreseeable period. So we have not faced any liquidity issue as such. And even continuing, I think liquidity is not the challenge right now, but what we need to put together is that once RBI's positive action is there, then we can resume our business.
Got it. So just to sum that up, I mean, suffice to say that if at all we see any controlled growth going ahead, that will not be because liquidity is something that is constraining, is all that I was kind of trying to understand.
I mean, I won't put an adjective of controlled growth, but yeah, liquidity is not a constraint for whatever growth we want to achieve.
Got it.
Should not be.
So that's all from my side. Thank you very much and wish you the very best.
Thank you. The next question is from the line of Pranay Javeri from J&J Holdings Private Limited. Please go ahead.
Good afternoon, sir. Thank you for this opportunity. There is just one question from my side. Can you just elaborate on your comment earlier which you made on microfinance? Thank you.
So, in terms of what was the comment about microfinance?
Basically, you will see means the book degrow, or basically the disbursements are quite slow.
Yes, microfinance, basically, microfinance growth has been slower in this quarter, is in the current quarter that we are seeing. So microfinance business historically last years had grown much faster. Now, actually, when we talk about growth is neither a problem nor a solution, but when there's a growth, that can be a source of the problem. And so what I'm saying is that we don't have growth as primary objective this year. Our primary objective is to make sure that our assurance functions are robust, our systems and processes are such that they are completely fail-proof, and they meet absolutely 100% require the regulations in letter and spirit. So that is what the objective is. Now in microfinance, there are two things that have happened. One is we are trying to make sure that our compliance is strengthened further there. And two is that after the RBI's embargo, the banks have been cautious in lending incremental credit to this business, microfinance. And we also see that as an opportunity to make sure that we make our systems and processes more robust and make sure that there's a reassessment of our control system. So 1 or 2 quarters of microfinance will remain slow, and that actually gives us an opportunity to make sure that our house is fully robust and properly in order. But that is what my commentary on microfinance is.
So just one clarification here that would be helpful. So is this because of the embargo of RBI for the gold loan business, or there is something to do?
What happens is that, yes, embargo of RBI for gold loan business, the banks have become cautious about lending to all the businesses. But in case of housing finance, we have raised equity capital and we have a fairly robust capital adequacy there. And also it's a entity which is regulated by NHB as well. And all the businesses work differently and separately, but microfinance credit lines have been impacted more.
So this would be on the liability side. Because we are hearing some noise of RBI in terms of higher interest being charged. Is there something to do with that?
So in the entire microfinance sector actually, there has been RBI concern about these things, and everybody, I think, the association is also looking at it about the interest rates and many other things about the industry. See, this industry long term has tremendous potential, and it serves a very good social cause, because people at the bottom of the pyramid, even if they borrow at say 22 or 24%, what is the current rate typically in the microfinance industry, their alternative, this is my understanding, but obviously, I don't have any authentic research in my hand, but obviously, with our people, with our branches and whatever feedback we get from our customers, the alternative cost of funding for these customers at the bottom of the pyramid would be significantly higher, or complete non-availability of capital. And even by paying this kind of interest rate, most of them see significant improvement in their living standards. They are like handicraft, or people who are on vegetable vendor, or those who are doing certain cottage industry. For them, capital is such a constraint that if some small amount of capital also can basically change their lives. So the industry has a good purpose and a good cause, but there are certain regulatory practices which may get tightened, and obviously industry and regulator will work together for that.
Great. So to sum it up, do we see AUM degrowth?
In this quarter?
No, for this whole year.
I don't think so. I think we should be able to catch up over a period of time, over the rest of the year.
So, like a flattish year for microfinance this year.
See, I'm saying it's difficult to give guidance, but what we have to do is that if there's the industry will grow, we'll participate in that. This quarter may be slow, but in next quarter, as we get very confident about our assurance, we might be in line with the industry. So it's very difficult to give guidance, but we really have to see how things evolve from here.
Fair enough. Thank you so much, sir. Thank you.
Thank you.
The next question is from the line of Anand Ladha from HDFC Mutual Fund. Please go ahead.
Hello, sir. Sir, if you can give some more clarification on the value of SR. So what is the gross value of SR at the console level we are holding, and what is the current markdown value of those SR?
I don't have these numbers readily with me, but we can figure out. So what happens in case of SR is, I don't think that the concept, the way it works, the accounting and the index is that they're valued every quarter, and they're just like, the stocks or any other instrument for that matter, and then you take the value. So many times the value goes up with the accrued interest as well as the gain that is there, but I don't have those gross value and markdown number. But we value at the basis, the fair value what we get from the ARC. So
okay. But sir, we would at least have the markdown value of those SR we are holding today.
So I'll tell you why it become very difficult to do that. Because, once you are SR and whatever repayment has come, that basically keeps adjusting the value. So, the value, the gross value, suppose if 2 years ago or 3 years ago we had issued certain SR, there have been quite a few repayments done over a period of time. There may be small repayments, but every quarter they come, they also keep adjusting the value.
Mm-hmm.
So and plus, there's a pool which keeps changing over a period of time. So it's not really, it is not an instrument which is static, because if there's a repayment, NAV goes down, and then there's the mark to market up or down. So it keeps changing every quarter. And it's a pool. So I think so some of the SRs would have been issued last quarter, some of the SRs would have been issued 2 quarters, 3 quarters, 1 year, 2 year back. So it's all to segregate and find out gross value will be very difficult. It will be very different for every SR.
Okay. So I'll take that offline. Sir, if you can give some clarification on the NSE transaction we did, sir. It's not a usual business transaction. So at one instance, we are taking a liquidity support from Fairfax, one of our large stakeholder, and at the end of the transaction, we are buying some equity from them. So if you can give some rationale for this NSE transaction.
So as per our internal treasury policy, out of the liquidity that we have, a small percentage can be put into, say, such as equity, IPO or other equity-related instrument, but with a short-term objective. Now, this transaction was contracted before the RBI order, which is before 4th of March. But, I don't know, as a group, we have more than 2% of NSE in various funds of our 361 and others. And therefore, the approval process is a little longer. And NSE took more than a couple of months to approve the transaction. But obviously, Fairfax had contracted the trade before the order, and the approval came later, but both the parties are committed to honor the contract. And that's how the transaction consummated after the order, and that is when it came to the public as well as the limelight in terms of discussion. But having said that, as I said, that our treasury policy basically is to these equity instruments are only for short duration. So they'll be liquidated during this quarter. And so I think, does it answer your question?
Perfect, sir. So lastly, on the NPA, sir, we have seen some increase in gross NPA in the gold loan as well as developer loans. So if you can give some color on the same.
So I think I explained in my preamble that with gold loan, there are rollover cases where earlier we took a view that if there's more than 75% of LTV, cover, there's all the loan is less than 75%, we can take it as a new loan or we can deem it as a new loan. But auditors have taken a view that that is not the case, and these have to be treated as NPA. But when we are rolled over for the customer, we can't really press the customer for repayment faster. So we have to wait for the rollover period to get over. So in this quarter, next quarter, they'll come back to normalcy. But as I said, that in our gold loan portfolio, almost the book has, sort of reduced by 40%, but we did not have any case of a customer complaint or a loss or any other problem for that matter, touch wood. So this is about the gold loan rollover. In case of construction loan, there's one loan of around 60 crores or so, where there has been 1 quarter delay in the payment, but we have a fairly strong qualitative cover there. But that had to be classified as NPA because there's more than 90-day delay there. But that will be, I don't expect any loss there, but it has spiked the CRE GNPA for the quarter. Because now the book also has become smaller after the ARC transfer. So on a smaller book, that 60 crore rupees also becomes significant.
Perfect, sir. And lastly, sir, on the housing finance business, at least you don't have any liquidity challenge in that business, and that business can continue to grow.
Yeah, Mohan is here with me. Maybe he can share his thoughts on this.
Yeah, hi,
Mohan
Anand.
is the CEO of Housing Finance.
Yeah, hi, Anand. So in housing finance, usually, as you know, the Q1s are a bit muted because a lot of changes happen. But keeping that in light, we are very much the way Q1s are, and our disbursements of housing finance business are as usual as they would be in a quarter one. So this was as per our annual plan as well. So we are doing pretty fine there.
Perfect, sir. That's from my side, sir. Thank you.
Thank you. The next question is from the line of Anusha Raheja from Dalal & Broacha. Please go ahead.
Yeah, thanks for taking my question. So you had AIF exposure amounting to around 1,200 odd crores, which was supposed to get matured. So, the loss there is notional or you have booked it? It's a realized one.
No, it is not. Okay. So this loss can be recouped if these assets basically realize. Almost 85% of loss can be recouped because if there's a higher realization, then this SR 85% share come to us.
Okay. And so in Q1, so can we expect normalization in the gold loan NPAs, or do we expect the rise in the NPAs in the gold loans to continue in the Q1 as well?
No, I think NPAs of gold loan will get normalized, partly this quarter, partly next quarter. But hopefully by next quarter, more or less, they will be in line with the historical normal trend.
Okay. And what resulted in rise in commercial real estate loan NPAs?
Sorry? NPA because there's one loan where the installment was not paid and it became over 90 DPD, so it had to be classified as NPA.
Okay. Okay, sir. Thanks.
Thank you. Thank you, Anusha.
Thank you. The next question is from the line of Abhishek Murarka from HSBC. Please go ahead.
Yeah, hi, Nirmal. Good
Hi,
afternoon.
Abhishek. Go on.
So, my question is on the standalone business. So, in the period then where there's a contraction in gold loans and you can't disburse, you'll still be maintaining the infrastructure, the people, branches, all of that. So that cost will obviously, stay on the book. So, is there any alternate business that you are planning to do in the meanwhile, or just how do you plan to use that infrastructure, or you just maintain it and wait for the approval from the RBI? What's the strategy there?
No, it's a good question, Abhishek. So we thought and internally we deliberated and debated a lot on this. So one is that the people who are skilled in gold loan, while we have tried to train them in unsecured business loan as well as LAP, and also their cross-selling insurance and other products. But because the core is gold, and as we expect, that maybe in a short time we should be able to resume our business based on that premise. We are not there to disturb that infrastructure. But what we have done is that we have told our people to engage with customers and track them carefully, service them properly, so that whenever business resumes, we can get back our old loyal customers as quickly as possible. So that's a call one has to take. And so in terms of, I don't think we'll diversify in terms of our strategic focus, but the product that we, in any case, we've been doing, where we have the core competency, that is where we can use these branches more intensively. because what happens is that it's just a matter of few months, and you diagram any new business for that matter will take a few years to stabilize, go up the learning curve and get critical mass. So, we thought that we'll stay put. We'll do certain cross-sell and mitigate the damage, but other than that, we'll wait for the gold loan business to resume.
I was thinking of something like sourcing the gold loan for a bank where you can keep using your customer and you're not disbursing anything the bank.
So, I think we can become a business correspondent and source 100% for the bank. That is not something which is prohibited. Now, the challenge is that every integration in terms of process, technology is fairly long, particularly with banks. Because even in co-lending, it takes 6 to 9 months because almost the real-time KYC check and credit underwriting. So what is happening is that we try to pilot this, but we realize that if the normal business operations will resume, say, in a short time, say a few weeks, then it may not be worth the effort to change the course because it's a huge effort. And then when the co-lending starts, then we are already, tried and tested for co-lending. So we can do all our other activities quicker if we don't digress. That is what the thought is. But we have piloted, we have talked to a few banks, and we are still working on it. We are keeping it ready as a backup emergency plan in case there's an inordinate delay.
Yeah,
but there the margins are also different, and there are many other implications in terms of process flow, technology, and integration.
Got it. And in terms of the RBI conversation, while I understand there won't be any, timeline, you yourself might be a little unsure of the timeline, but after the RBI comes back, then how long does it take for you to restart? Let's say whenever they come back.
So, okay, we have been engaging with RBI, so they've been supportive and they've been helping us understand the issues and how to navigate. But whenever the ban is lifted, we can come back quickly because immediately in the next day we can start the business. Now the question is that the bank credit lines, typically, banks also take some time to process the application, which can take about a month to month and a half. But we already have liquidity cushion. So the co-lending and many other, these transactions can start very quickly, immediately, maybe on the next day or within a week, if I had to be, maybe, a little more conservative. But I think the business will start immediately. So, and gather momentum, as we go along. So within a month or 2 months, we'll try and get back to the disbursement levels that we were. And within a few months, maybe 6 months, we'll try and get back. We'll hope to or look forward to get back significant part of our market share back.
Okay, sure. And just lastly, in terms of MFI, so till the time the ban lasts, you expect some liquidity tightness to continue, or can that be independent of the ban and slowly, lenders get comfortable and start lending more? How do you see?
In microfinance, Venkat has joined the board, and we also got very marquee people on the board. And we are, the business model is also under review and making sure that is robust from long-term point of view. So hopefully, that business in terms of the disbursement pace should pick up from next quarter, and will accelerate from there.
Got it. Okay, thank you, Nirmal. All the best. Thank you.
Thanks a lot.
Thank you. The next question is from the line of Dhaval from DSP. Please go ahead.
Thanks for the follow-up. Just two more questions. First is on this running cost of the gold loan business now. Nirmal, if you can just give some perspective on it. And also, what's the potential runoff that we expect in the next couple of months? So that's one part. And the second is on the NPA in the digital PL book, while the book is small, but just any thoughts of, seasonally 4Q is normally a good quarter. So any specific reason, and are you seeing some bit of pullback in 1Q, or it's...
Sorry, I think your voice is getting a little muffled. Your first question was, what is the running cost of gold loans, right?
running cost of gold loan and, the runoff that is expected in the next couple of months in the book. And the second question was relating to the digital PL book. We've seen a spike in the NPA in the fourth quarter, which is seasonally good quarter. Is that getting arrested in one two, or it will likely to deteriorate further? And what's the course correction that we're taking in that portfolio?
Okay. So gold loan, our standalone running cost is around 320 crores, 360 crores in a quarter, which is around 120 crore rupees per month. But that includes the top management cost, as well as business loan, and significant part of that cost is difficult to separate. So that is one thing. Second thing is about digital finance. That book has a higher yield and will be slightly higher losses also. But over medium to long term, I think business still is profitable and generates the required ROA. Now, in that business, what has happened is that we have, in terms of small ticket business loans, what we are doing is smaller and smaller. As you become granular, your yield goes up or yield is maintained at a higher level, and your NPAs may go up a little bit. So I think that's the character of that business. But what we have done in that business also is that there are certain changes that we have done in terms of the credit underwriting process as well as the ticket size. So what we will see this year is that ticket size might improve a little bit and the GNPAs will fall. So if you say from FY'24 and to FY'25 end, then our internal business strategic plan is basically to bring down the GNPAs, which are between 3 and 4%, to closer or maybe less than 3%, 2.5%, or more closer to that. And that might impact yield a little bit, but broadly, I think that we should be in line with that. And the business will have robust growth this year also.
Understood. And sorry, just on that runoff in the gold book, that's roughly about 3,000 crores kind of number per month.
So runoff in the gold book is almost about 10% per month.
10% per month. And does it accelerate in the rest of the year because of the residual maturity being now relatively lower compared to where we started? So does the principal runoff accelerate as we progress month after month?
Not really, because at any point in time, you have a book which has different residual maturity. So like supposing March when we had a pause, so there would have been loads of Feb, Jan, December and going back. So broadly, there won't be any acceleration in the runoff. But as the book goes down, the absolute amount of runoff will also go down.
Understood. And just to the question that Abhishek asked around this, alternate options, including the BC one that you talked about, at what point do you, we decide to sort of, move in that direction? I mean, is there a particular timeline that you have in mind around which we think of this 120 crore fixed cost that we have largely to, reutilize that in other ways and means?
So I think, maybe by September, hopefully, if, there are... So actually, when we've been engaging with RBI and we are taking their guidance, and they're very supportive in making us understand, and they also understand the problems and the issues that we are going through. So I think what they want is also if the compliance is done, then they also want the business to resume and support. So there's no reason to be very pessimistic about this business as such. But still, to answer your question, if these things continue for 3 more months, then obviously we'll look for, or maybe 2 to 3 months more, then we'll look for alternate plans, which is, maybe a significant cut in cost or, the alternate other businesses as such.
Understood. And our audit for FY'24 will be starting anytime, or it's already underway, the RBI audit?
So I think the audit cycle has started. So maybe the next year, FY'24 audit will start anytime. We have no idea on that, but that can start at any point in time now.
Got it.
I think the cycle starts from July, if I'm mistaken, but I'm not I think it's so there are many NBFCs, so they take it up from July onward.
Understood. Got it. Thanks.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Gokul Raj from Bavaria Industries Group. Please go ahead.
Hi, Raymond. Any update on the business loans? Because that's the
Sorry
only
to
one.
interrupt, but the line is not very clear. We're getting a slight echo as well from your line.
Hello, is it better now?
Yes, much better, sir. Please go ahead.
Yeah, I was wanting an update on the business loan because all the other three segments there's been an update. So any update on the business loans?
Business loan has many segments. One is unsecured business loan, the second is supply chain financing, and the third is loan against property. On a smaller base, that business has been growing at a normal pace as it was growing in the last quarter. So that business on a relatively smaller base will continue to grow this year.
Okay. Because the standalone business, the business loan is a standalone NBFC, has that had a huge impact or that is continuing as per your plan?
No, the standalone NBFC, the business continues standalone NBFC, and is so the disbursements are at normal pace.
Thank you. Best wishes.
Thank you. That was the last question, ladies and gentlemen. I would now like to hand the conference over to the management for closing comments. Over to you, gentlemen.
Thank you very much, ladies and gentlemen, for joining this call and for your patient hearing. For any further query, you may reach out to the investor relations team, and we'll be happy to address any query that you might have any further. Thank you very much, and connect back with you soon.
Yeah, thank you so much. Thank all the investors for being on the call and your support. Thank you.
Thank you. On behalf of IIFL Finance Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.